Welcome back to Invest with Festus. I will just say that this is take two because my microphone died on me. So unfortunately, I had to start all over. So I would appreciate it if you at least like the video, subscribe to the channel, and let's get straight into it. Today we're going to talk about how I continue to beat the stock market year over year. Now, I do want to preface that I'm not your financial advisor. I'm just an average guy on YouTube. I do believe you do not need a financial advisor. However, I am someone who really enjoys learning about finance. You can see by all the hundreds of videos that I've made that I truly know my stuff, and I'm just so interested in money and how it works. And so it is so much easier for me to beat the stock market because I invest so much time into learning everything that I can. Currently, I'm about 44% up on the stock market, maybe 49%. I'm going to have to check again. It might be a record year for me, to be honest. And, that's saying something with everything that's going on in the world. So with that being said, how do I beat the stock market? Now, if you watch how do I 2x my or 3x my stocks every single year, you would see my entire portfolio. I'm just going to list off a few off the top of my head that I can remember. So the first thing I want to say is that if you buy the FANGs, which is Facebook, Amazon, Netflix, Google, and then they added the T in there, which is like the FANG or whatever, which is Tesla. Those companies will continue to be profitable and continue to do well over time. They have been doing well. I only own two of the companies that I just mentioned, which is Facebook, also known as Meta, and Tesla. With that being said, I am not someone who advocates for growth stocks. However, those are typically the most profitable companies in the market. And so if you are okay with selling at some point in order to reap the benefits of your investments, you would eventually have to sell your Googles, your Amazon, your Tesla, because they do not offer a dividend like other companies do for me. Some companies that I really, really love and that are continuing to do well. I have to add Walmart to there. If you've seen my shorts, you know that I just made about $900 in a day off of Walmart stock. And it was only 4% of my portfolio at the time, and it's still not even that much of in my portfolio. So Walmart is doing absolutely fantastic for me right now, and it was after the stock split. That just shows that they're growing and they're doing better. I mean, if you're having stock splits like Tesla did, then you're on pace to continue to do good things. Costco's, I love me some Costco's. Uh, Apple stock is amazing and has been amazing for me. Goldman Sachs, awesome, phenomenal. I love my consistency with my VOO and my S&P 500. Those are ETFs, and they do have expenses correlated with them. So if you do decide to pick out ETFs like VOO and the S&P 500, understand that there is a little bit of an expense attached to that. I also have another ETF. I actually have a few, which is NOBL, which is a dividend aristocrat. It comprises of a lot of the dividend aristocrats. Those are companies that have paid a dividend and grown their dividend over a 25-year period. Super excited about having that in my portfolio. And then, of course, VYM, and then I think VTI as well. I also have the Dow Jones in there as well. And that should round up all of my ETFs. Now I have a little bit of BlackRock, I have a little bit of ADP, I have 3M, I have Visa, MasterCard, I have Pepsi, Coca-Cola, I have Sony, the PS5 company, the PlayStation company. Now all of these percentages are going to be different, how they're ranked within my portfolio. The ones that are higher up are going to be your Goldman Sachs, your Apple, your Tesla, your Meta, VOO and VY, and your S&P 500. Everything else is going to start to trickle down underneath that. And then from the least that I really want in my portfolio, like Pepsi is rated very low in my portfolio. What else is rated very low? BlackRock is rated pretty low in my portfolio. I have O shares, which is another kind of ETF, I guess. I should have listed that under the ETFs. 3M is rated pretty low right now. I have ADM, which is a agricultural company. And I'm very comfortable sharing my portfolio because, again, it'll continue to do well. If you look at my portfolio, you can see what you like, what you don't like, and you can do your research and understand why I am 3Xing. Now, let's get into the nitty and gritty. How do I make sure, or how do I analyze my own stocks? Well, that's a good question, and this is what we're going to get into now. How do I analyze my own stocks? Well, I start by looking at the 5 year. I want to make sure that it's at least 36% or higher. Why 36%? That's just a number for me. So once I see the 5 year at 36%, I'm going to look at the 1 month and the 1 week. I want to see if that is down. Now, this is not a deal breaker for me. If it's down for the 1 month or if it's up for the 1 month, that's not really an issue. I just don't really want to buy at the top, if that makes sense. So if it's down, that's even more of an incentive to buy. Sometimes when I see a stock down for a week or a month, I'll throw a little bit more money in there just so that I can dig into that and get more shares while it's low. That's called the discount. And, Warren Buffett always wants a discount. I do too. Now, I can't go to a company and say, hey, I want 20% off of this stock like Warren Buffett does, but I can buy it when it's low before they do some cash back and boost up their own stock themselves. So with that being said, if it's down for the 1 month, again, not a deal breaker. If it's up, but if it's down, I'm more incentivized to buy, especially if the 5 year is looking really, really good. Another thing that I want to look at is the expense ratio. I also want to look at the volume. If the volume is not over like 2-3 million, then what are you really doing? Are you really getting a lot of traffic? Do people really know about this company? Are people really trading this company? Are people buying into this company? I want a company that's going to continue to grow. And if it's not getting any volume, then where's the growth going to come from? Now you need publicity. Now you need news outlets. Now you need all this stuff. But when I look at McDonald's, I don't have to look for publicity. I don't have to look at news outlets. McDonald's is McDonald's, and they will continue to have people investing in them. And I know that. So from a business standpoint, I'm always willing to bet that McDonald's will have high value. With that being said, I want to look at the dividends now. We've talked a little bit about expense ratios in the past. And, you want to make sure that expense ratios are down. That's typically going to be in your ETFs. But then you want to make sure your dividend is pretty good. I like a dividend that's honestly above 2%. Right now, my portfolio is at 1.95% for the dividend as a whole. And I think that's really because the growth is so high right now in my portfolio that it's lowering my dividend payout. What do I mean by that? Sometimes when your stock grows a lot, the dividend seems to be lower, but you're actually getting paid out more. It's just that the companies are growing so fast that the dividend can't really keep up. And so that's what's really happening right now. So let's say if my stocks went down 10%, my dividend would actually go up to like 2.3, 2.4. But having a lower dividend, knowing that I should average around 3%, to be honest with you, it just shows how much my stocks are growing and how quickly they're growing. And so I love that. I absolutely love that. And I believe that, more companies will increase their dividend, which is only better for me. Now, with that said, Walmart just increased their dividend, and I'm benefiting from that because I've held on to their stocks. I've held on to the company, and now I'm reaping the reward of being a loyal consumer of Walmart. So with that being said, now that I've done that, I want to analyze the company. And what do I always say? You have to like it, you have to use it, you have to love it. I talked about PM a little bit earlier in my previous video. Again, I told you that my first video got deleted, so I may go over a few things a couple of times. I do apologize about that. PM is a cigarette company. I don't smoke cigarettes. However, I invested in PM because I knew that a lot of people did and that it would continue to be profitable. In the younger generation, they're talking about sustainable investing. What does sustainable investing mean? That just means that you're investing in things that are going to help the economy, that's going to help people. And so I'm actually thinking about getting rid of PM and looking for one sustainable investment that I believe is going to change the world, help the world, and be a benefit to me financially. And if I can find that, I think it would be great to replace PM with that and ride that into the future, because I do believe that sustainable investing won't just be a fad, but it will be something that blows up in the next 5 years. And being an early investor in that and getting rid of PM will be great for me, because again, it's something that you love, something that you use, something that you know. And so when I find that something, I'll go ahead and get rid of PM. Now, when do I start to analyze my stocks? Sometimes I analyze my stocks once a year, and sometimes I analyze them twice a year. This year, I probably analyzed it once already in January, and I also analyzed it in December. Now, I typically analyze my portfolio in December, getting into the new year, seeing what I want to get rid of and what I want to keep and what I want to add. I typically don't really add a lot of companies anymore, but I'm always looking to get rid of companies. I have 28 companies, and I want to make sure that I'm getting rid of any stragglers that are not paying me what I need to get paid. And so that's how I kind of analyze my stocks. When I was in college, I would look at my stocks every single day. I didn't have real estate to manage. I didn't have a YouTube channel. I didn't have really nothing else to do outside of working stocks. Now I have a life. I have family that I check on. I have a lot of stuff that's going on. I've always had family, but I didn't check on them as much now that I live far, far away. And so now I analyze my stocks on basis. If I see it's going down day after day after day, then I'm going to say, oh, what's going on? Let me see what's going on here. But that doesn't really tend to happen. Maybe once a year when I'm seeing something going down, and it'll be the whole stock market. It wouldn't just be one company, to be honest with you. And so it's very, very easy for me to see that it's always an increase every single day. If I have one negative day, the next day is positive for like 3 days straight, and that's typically what I tend to see, and that's typically how the market goes for me with the companies that I've selected. So if you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you on the next one. Peace.